Here are 5 news from the world of the crypto industry. First, news. Worldcoin, WLD, to generate $130 million in profit. The price of Worldcoin is currently stuck in a sideways trend, waiting for a push to start a rally. The token of the Worldcoin project could soon bring significant profit to investors if the price crosses the $5 mark. According to the on-chain indicator Global in/out of the money, GIOM, about 27.11 million WLD tokens are on the verge of profitability. Coins worth over $130 million were bought at prices between $4.38 and $4.95. Considering that WLD is now trading around $4.91, profit is imminent. Although the altcoin is currently inclined to consolidate, this is not due to sales by investors. This possibility is excluded since the share of active addresses currently in profit is less than 3%. When this category of WLD holders dominates the addresses conducting transactions in the network, the price usually declines as such investors fix their profit. However, this is not the case now. The price of Worldcoin is currently $4.91. The altcoin formed a double bottom pattern in April and has been consolidating since mid-May. The boundaries of this consolidation are $5.64 and $4.38, with WLD not even approaching the breakthrough of the first level. The second line has endured several tests but has held. Thus, the likely scenario for the coin is sideways movement. If the price falls below the $4.38 support level, this neutral bullish scenario will be annulled. As a result, WLD could test the next key support at $4. Second, news. Fetch.ai, FET, price could fall below $2. For the last month and a half, the price of FET has been receiving mixed market signals. Now investors seem to be losing confidence in the asset. FET investors seem to be losing confidence in the asset and may start to offload it. This is indicated by several on-chain metrics. The FET price could decrease as investors currently exhibit bearish sentiment. The Network Growth Indicator, which assesses the formation of new addresses in the project network, shows whether the project is gaining or losing popularity in the market. In the case of FET, network growth has fallen to a 7-month low, indicating a lack of incentive for investors to conduct transactions on the network. The market value to realized value, MVRV, ratio also confirms the likelihood of a bearish scenario. The MVRV metric evaluates investors' profit or loss. The 30-day MVRV for FET is 12%, indicating profit and potentially stimulating sales. Historically, FET corrections occur in the MVRV range of 7% to 30%, which is considered a risk zone. If investors decide to fix their profit, the FET price could decrease again. The token is trading just above the $2.22 support level. This price point has previously been tested as resistance, so it is important for the price to stay above it to maintain growth potential to $2.49. This level has been broken several times in the past 2 months, but the coin has not been able to hold above it. Given the factors mentioned above, FET could fall to $1.95. However, if the altcoin manages to bounce back and overcome the resistance at $2.49, it could head towards $2.85, annulling the current bearish scenario for FET. Third, news. Former FTX executive Ryan Salame sentenced to 7.5 years in prison and fined $11 million. Ryan Salame, former top executive of the infamous cryptocurrency exchange FTX, has been sentenced to 7.5 years in prison and fined $11 million for involvement in financial crimes. The sentence, handed down by Judge Louis A. Kaplan, followed the collapse of FTX in November 2022. Salame was found guilty of conspiracy to make illegal political contributions and running an illegal money transfer business. The former FTX executive pleaded guilty to these charges along with 3 other high-ranking executives of the crypto empire. Salame's sentence exceeded the recommended prosecution term of 5 to 7 years. The defense argued for 18 months, citing his cooperation with authorities in personal losses due to the FTX collapse. Ryan Salame agreed to promote the interests of FTX, Alameda Research, and his accomplices through an illegal campaign of political influence and an illegal money transfer business, which helped FTX grow faster and become larger by operating outside the law. Salame's involvement in 2 serious federal crimes undermined public trust in American elections and the integrity of the financial system. Today's sentence underscores the serious consequences of such crimes, said U.S. Attorney Damian Williams. Salame played a key role in the growth of FTX, managing its operations in the Bahamas and spending lavishly. His extravagant lifestyle included luxury cars, private jets, and investments in restaurants. Additionally, he was a significant political donor, contributing over $24 million to the 2022 midterm elections, mostly supporting Republican candidates. Salame's political contributions were part of a larger scheme orchestrated by Bankman-Fried. Besides prison, Salame faced significant financial penalties. He agreed to pay over $11 million, including a $6 million fine and $5 million in restitution. Additionally, he must forfeit 2 properties in Massachusetts and a luxury car. Following the collapse of FTX, federal investigators focused on Salame and other key exchange employees. The collapse revealed $8 billion in fraud involving senior executives accused of multiple financial crimes. Sam Bankman-Fried, a central figure in the scandal, is serving a 25-year sentence for fraud and conspiracy. Fourth news. Cathie Wood assesses the prospects of Bitcoin policy in El Salvador. The CEO of investment giant ARK Invest called El Salvador an oasis for the adoption of Bitcoin and AI-based technologies. Cathie Wood met with Nayib Bukele, the current president of El Salvador, who actively supports Bitcoin. The head of ARK Invest believes that El Salvador's net GDP could increase tenfold by 2029 if Bukele continues to adhere to his plans to spread BTC and AI. President Bukele's determination to turn El Salvador into an oasis for Bitcoin and AI communities, 2 of the biggest economic and technological revolutions in history, is why I believe the country's real GDP could increase tenfold over the next 5 years, Wood wrote on X. In addition to Cathie Wood and Nayib Bukele, the meeting was attended by El Salvador's presidential advisor Max Kaiser, Bitcoin advocate Stacey Herbert, American economist Arthur Laffer, and ARK Invest fellow Mark Seal. Kaiser noted that Wood explained and demonstrated in detail how El Salvador could increase its GDP by 2029. Currently, the country's figure stands at $30 billion, with an average income of only $450 per month. Over the past 5 years, El Salvador's GDP has increased by 30%, facilitated by Bukele, who took office in June 2019. According to Wood, the Latin American country's government plans to introduce the ARK Educate curriculum into the national education system. Salvadoran schools will offer subjects on robotics, artificial intelligence, blockchain, energy storage, and multiomics. During his years in power, Bukele recognized Bitcoin as legal tender, abolished taxes related to technological innovations, and removed taxes on foreign investments and remittances. Recently, the country's authorities launched a mempool to track their Bitcoin investments. El Salvador buys 1 BTC daily as part of a dollar-cost averaging strategy announced in 2022. To date, the country has accumulated nearly $400 million in Bitcoin. It was also recently revealed that El Salvador has mined nearly 474 Bitcoins at a geothermal power plant located near the Tecapa volcano. Fifth news. Son of VanEck founder to launch a USD stablecoin. The CEO of stablecoin issuer Agora and son of asset management head VanEck, Nick VanEck, announced the launch of a stablecoin on the Ethereum network this June. Nick VanEck presented the concept of third-generation stablecoins, aiming to revolutionize the digital dollar market. According to Agora representatives, digital dollars will become the dominant currency in the world in the near future. This shift will be facilitated by the new model introduced by the AUSD stablecoin. Analysts at Agora predict that by 2030, the stablecoin market volume will grow from $150 billion to $3 trillion. VanEck noted that cryptocurrencies pegged to fiat have evolved significantly over the past decade. The era of stablecoins 1.0 or first generation began with the appearance of Tether in 2014. This was followed by the second generation of stablecoins, namely USD Coin and BNB USD. USDC and BUSDC offered greater transparency and a licensing process for issuers. However, they retained a distribution model where the company has only one main partner responsible for issuing and controlling the stablecoin, often leading to conflicts of interest. Second-generation stablecoin issuers benefited from rising interest rates. However, the emergence of yield-bearing stablecoins brought new challenges. Some classify such products as securities, limiting their utility and liquidity. Despite being dollar-denominated, these products are essentially yield-bearing. They may try to position themselves as stablecoins or be used as a means for payments or trading, but they are unlikely to achieve significant demand. Significant demand is subjectively defined as usage by traditional corporations, financial services firms, and $25 to $50 billion in circulating supply, said VanEck. The CEO of Agora emphasized that the main driver of utility and liquidity for stablecoins is business. The AUSD token represents the third generation of stablecoins and is primarily designed to reward businesses for contributing to the development of the stablecoin. For example, for listing the asset on their platform, providing liquidity, marketing, or accepting AUSD as payment or collateral. The revenue distribution model introduced by Agora will allow businesses to reinvest funds in development, marketing, security, and user acquisition, fostering the creation of a mutually beneficial ecosystem. AUSD is fully backed by cash, U.S. Treasury bills, and repurchase agreements. The reserve funds of Agora will be managed by VanEck. In April, the Agora project successfully raised $12 million from Dragonfly, a venture firm in the field of digital assets. The financing round also included General Catalyst and Robot Ventures.